You're tuning in to the Investors of Change with your hosts Riz Fizz and the Big Lebowski. For more insights on content similar to this video, feel free to subscribe on YouTube or follow on Twitter. The views on this video are opinions shared and not investment advice. Remember to do your own due diligence.
Welcome back, everybody, to this Good Food Q1 2022 earnings call review. Per tradition, we will always do a Good Food update on the calls. What is maybe not so traditional for this call is that we are way behind in when posting this video. Adam and I normally try to get the videos out same day as the call, but this time around we have been running late. Adam has been traveling and exploring the Far East together with his girlfriend, and thereby also has been so fortunate to be off the grid in following the markets. Well, now we've got him back, and nice, Adam, to get behind the mic again and do another recording together.
Yep, happy to be back. Well, I guess that's not true. I had a great time and wish I was still on vacation. But yeah, I feel really refreshed. And yeah, it's true. I wasn't looking at my accounts very much when I was gone. I kind of took a break and came back to a lot of red in my portfolio. But I'm still gonna be following the Good Food story. And yeah, there was a lot to kind of take out of this quick commerce angle of the Q1 of 2022. Normally, we kind of do our 3 key takeaways for the earnings calls, but this is gonna be a little bit different just because I think there were fewer topics to chat about this time. And Jacob, with that, what was our big shared key takeaway of Q1 2022?
Yeah, so definitely, like you mentioned, normally we would go through a lot of the typical metrics for the company. We try to spare that away this time and try to do something more straightforward. And there's no doubt about that this quarter is all eyes on the first initial metrics of the quick commerce rollout. So the quick commerce was firstly introduced a few weeks prior to the Q4 earnings of 2021. And so everybody was kind of looking forward to how are the first micro fulfillment centers working. And I think that's something that you and I have been chatting a little bit about before this recording. And this is some of the parts that are really interesting to dig into.
Yep. So that kind of one key takeaway that we both have is Good Food is kind of going all in on quick commerce, in our opinion. And I'll start off with a quote from Ferrari during the call. And that's that he said, "We will drive long-term shareholder value by executing on 3 core priorities. 1, we want to grow on-demand active customers. 2, expand on-demand coverage. And 3, improve profitability." So there's obviously a key word missing from those 3 core priorities, and that's meal kits. And meal kits have kind of now been lumped into their on-demand channel. Their assumption is that customers are going to kind of get a combination of their private label groceries, their meal kits, and their ready-to-eat orders to drive larger basket sizes. Jacob, turning to you, what were your big thoughts on quick commerce in the quarter?
Yeah, so I mean, and personally, so first of all, I think you and I have been discussing this before, and that we're both long-term investors in food. And already coming into the Q4 quarter back in 2021, there are some overall metrics for the company that weren't trending that great when looking from an outside. And the quick commerce part, I would say it's impossible to time the market. It's impossible to time a stock development like Good Food, but I would say that buying into food, the rationale from my point of view to own this company has never been to own a meal kit company. So I think it's been pretty straightforward that it's been the bigger picture, the bigger narrative around groceries, around delivering groceries faster, around a diversified basket. So I would say a key thing for me as a private investor in Good Food is that from the get-go, I've always bought into the, which Ferrari also phrases so elegantly, the position around Good Food, which is unique in terms of the assortment and in terms of the offering it gives its customers and the customer-oriented focus, and how to obtain and roll with the growth of the TAM, which is expanding all the time. So I would say that I like the quick commerce initiatives. I like some of the metrics they're presenting on this quarter, which I think is fascinating for us to dig into. And hopefully these metrics are the tip of the iceberg for good food.
Yeah, I'm right there with you. The thesis for me wasn't that this is going to be some super successful meal kit company long term. The attractive thing to me is that they were getting into groceries, and it was kind of like this, low, low fixed cost grocer, where everything can be done online, and they don't need very much inventory. The logistics are simple. They're just shipping direct to consumer instead of shipping to stores. And it's a lot more convenient for people as we get more and more used to shopping for groceries online, which I think is going to continue. And as management at Goodfood says, the TAM is only getting larger. And by adding quick commerce, they're once again, increasing the total addressable market as well.
Adam, could you just to reflect towards the listener, could you describe what is a micro fulfillment center in Goodfood perspective, and how does that differ compared to what they had in the past?
Yep. Well, in the past, they had these kind of larger fulfillment centers that they would kind of manage the meal kit inventory as well as the private label, and that's where they were kind of like larger facilities, and it was quite a large. They were distributing to customers who were quite far away. So I think customers could even be like hours away, and they would kind of do one route every day or a few routes every, a truck would fill up the entire truck, and they would go and they would make deliveries to a bunch of different neighborhoods or a bunch of different cities. And now they have these micro fulfillment centers where they cost, I think, just under about $1 million in CapEx to get them up and going. In order to get some demand right away, they'll move some of their meal kit volume to those MFCs to kind of get them operating. And they're delivering about 3 deliveries within 3 kilometers every hour, I believe, out of these MFCs. And there's pretty few of them right now. There's only, I think, 3, a couple in Toronto and 1 in Montreal. And they said by the end of the by the end of fiscal 2022, they expect to have 8 or more of these up and running.
Yeah, and so to elaborate a little bit on the Q1 again, so that is, we talk about figures here, and the metrics we're going to go through right now is that we have approximately 8 weeks, and that's it, of these 2 to 3, because it's free, you said, right? Micro fulfillment centers that have been running and are in the figures of the Q1 reporting. And if we break down the numbers, they're the metrics, that has been 13,000 active customers. Half of those were new to Goodfood, which, by the way, is a great metric if you ask me. I was really paying attention to that. I don't know if that came into I think that came into the questions part of the earnings call from an analyst, which is interesting to hear that they have been able to attract half of the active customers coming from outside. And also that it seems that when they look at the patterns of how these customers interact with the product offering and with the quick commerce offering, they have a frequency that is twice as high as the normal subscription meal kit customer, which is logical. I mean, I guess you would assume that, but it's nice to get these metrics confirmed, even though may it be only 8 weeks of running the first micro fulfillment centers.
Yeah, I think they said that on average, the quick commerce customers or the on-demand customers are ordering about 7 to 8 times per period, so per quarter, whereas the kind of meal kit subscribers are only ordering 3 to 4 times.
Mm.
And the average basket size, they said, of these quick commerce orders are about $65 to $70. Ferrari said that this is well ahead of the quick commerce competition in basket size. And part of that is led by their kind of their offering. They have meal kits, ready to eat meals, and they also have their groceries, of course. So if you think about, if a meal kit is $20, $25, it's if someone is adding a couple of those, a couple of groceries, it's going to be a lot easier for them to compete with other quick commerce companies when they're kind
Absolutely.
of focusing on convenience. Yeah, they did mention like Skip the Dishes, and Skip the Dishes is building out their own dark stores, but they're more focused on convenience items. So if you think of that kind of model, obviously the average order size is going to be much smaller than grocery and meal kit.
Yeah, because like you're saying, Ferrari talks about this being ahead of global peers, which he talks about that this is 2x, 3x higher average order value. And this is one of the metrics that is really going to be interesting to follow up on, right? Because if you look at it from a pure quick commerce perspective, you need your milk, you need your butter, you need maybe one or two items more. That would be difficult to hit $65 to $70. But exactly like we talked about before, if you buy into as an investor that Goodfood is uniquely positioned because of its product assortment to really be in a favorable position to make attractive unit economies, this is one of the places you have to pay attention to, because when you look at that basket, which is exactly like you're saying, he elaborates a little bit on it in the questions area, where he talks about 33% of it being meal kits. So of this 65 to 70 Canadian dollars, which is exactly like in line with what you're saying, that a meal kit is $20. 50% is groceries, and the remaining is pre-prep meals. So that is really an assortment, like exactly what you're saying, Adam. And what is interesting, that the pure quick commerce players, which are coming more from the on-demand item side, will have difficulties in reaching these sort of average order values. And the question is, of course, once Goodfood starts escalating and increasing their micro fulfillment centers, will they be able to kind of build on the tradition of being a meal kit company to adding that together with the pre-prep meals into an attractive offering, which gives us these very, very attractive average order values?
Yeah, it also gives them the ability to test certain things out once they have their MFC. Like if people are getting their orders within 30 minutes, it also allows them to experiment with like preheated meals, right? So you just order from Goodfood. You don't need, you can just eat it on arrival, whether it's a ready-made, or maybe they even have some warm dishes, cooked chickens and stuff like that. So
was it you, Adam, that shared an image with freshly made sandwiches?
Yeah, I don't think I have those available yet in my area, but I think someone shared that they have sandwiches and stuff in Montreal. So yeah, I guess that would be similar to what I'm saying with pre-made meals.
And I think you also showed me something that's like only less than 1 week old, when you saw some new items being actually within some new categories that are a little bit unfamiliar for Goodfood, like being within I don't know what the English term is here, Adam, but like band-aids and stuff like that, hygiene products, yeah, I guess you would call it.
Yeah, so I guess as you're a quick commerce player, I think that the kinds of items that they had were pretty smart. It was a lot of like stuff like Tylenol, like aspirin, toilet paper, and medicine, stuff like that. Pretty much just home and beauty products, and really kind of target, like the initial launch of those products were really kind of targeted around like Canadian winters, I feel like, with a lot of like cold medicine and stuff. And that's a pretty smart way to do it, because if you're not feeling well, you have a cold, the last thing you want to do is run to the pharmacy or the grocery store. What better way than to get it in 30 minutes from Goodfood, if you're aware of it, right?
Exactly. And Adam, what what you're saying and what we're listening to in the conference call, what is really evident from all the questions I think that are coming in from all the analysts is everybody's trying to make their own sheet of how quick commerce P&L looks like. But when we've basically been covering it here on this video, if you have an average order value that is around 65 to 70 Canadian dollars, if you can hold on to that while scaling, let's say that's possible. What has been interesting about Goodfood is the margins, because when you have been in the meal kit business, you can attract some high, or you can generate some high margins based on the nature of being in the meal kit business. If they can still be able to maintain those high margin because of a high percentage of private label products, correct me if I'm wrong, but I think we're still talking about 80% of their assortment being private label. So they have a lot of leverage there and can control the assortment and the margins, and still have some flexibility within the meal kit and pre-prep part to attract the most attractive seasonal margin products. When you roll that across these micro fulfillment centers in a P&L, you also look at the unit economies around deliveries, where they talk about, you mentioned it just a second ago, with doing free deliveries currently per hour, where the target for scale for the larger scale is 5, which Kagi also mentions that they are actually hitting at some times at peak hours during the day. If you put all that together, that gives a 4 Canadian dollar per order delivery cost. This can really look attractive if you look at it in terms of the bottom line and the income that a quick commerce part could generate. Of course, all of this being speculations based on 8 weeks of a couple of micro fulfillment centers. But if you scale that up, what is your take on a quick commerce P&L for Goodfood, or the general P&L being it?
Yeah, I think it depends on, we see gross margins trending up again and being at around 28%. But the thing is that we don't know how much of that is influenced by meal kits and how much of that is influenced by groceries. Like you said, in terms of pricing power, they did mention that being 80% private label and being vertically integrated does give them a lot of room to be flexible with pricing. So I think I am optimistic, especially if they can retain that order, that average basket. I can see them hitting that peak density scale of 5 orders. This is a pretty new service and they're already hitting 3 per hour. So it doesn't seem so much of a stretch to see them hitting 5 orders per hour, especially in an area like Toronto, Montreal, and Vancouver.
Yeah.
Going back to the P&L though, I think that another big fear of the analysts right now is kind of the CapEx spend, the cash burn, and the cash reserves that Goodfood has, because with changing the business model, obviously is coming some pretty large investment. And it's kind of a good thing that we waited a little bit to do our call, because if we released it right at earnings, obviously some pretty big news came out about an offering, a $30 million capital raise, which they said was to pull forward the launch of some additional MFCs. So Ferrari said that they're thrilled to bring forward on-demand micro fulfillment centers rollout through the opening of a total of 20 plus facilities by the end of calendar 2022, which was originally planned for fiscal 2023. So originally they kind of said that they had planned for 8 plus for fiscal 22. Fiscal 22 doesn't exactly end at calendar 22, so the two statements don't exactly match up. But this is like 8 versus 20. So I don't think that they would really be as aggressive with rolling these out if they didn't see some really attractive economics. And the upfront spend isn't massive for these fulfillment centers. They said on the call that they expected 25 million in capex by the end of fiscal 22. They currently have about 105 million in cash at the end of the quarter. and they have about $40 million in debt right now. Obviously, this has changed a little bit after the raise, but they do have kind of getting they did talk a lot about you know, being a little bit more conservative with their balance sheet, reducing the cost, the fixed costs, and reducing headcount in some ways. But yeah, how do you feel about the cash burn and the capital raise?
Yeah, so when discussing this on Twitter and in some of our closed forums on Discord, so I would say that, well, first of all, this was some hard fine balancing between the Reuter and Coggy when the questions came up around the cash holding they have and the revolver, because they not at all indicated that anything was closing up in doing any additional financing. And so 1 week later coming out with that was a little bit, yeah, I don't know. I like the fact that they raised the 30 million. I like the way they did it with the banks. I also like the fact that this can scale up the plan from 8 micro fulfillment centers towards 20, exactly like you're saying. So I think that this shows really a position of strength where they are, the management is bullish. They have the financing seems to be bullish around to really scale it fast. This I like, but I of course obviously dislike when I felt that they tried to talk about the strength of the cash they have, and not seeing as so much as something where they had to add 30 million and announce that 1 week later, obviously knowing what they would announce when they already did the Q1 quarter. So there is something about there where I thought that this management team was a little bit more straightforward with how
Yeah.
things are playing out.
Yeah, I agree. Something that I really like though about the MFC rollout is if the unit economics are actually as strong as they say, then I think it's a pretty bullish thing, because in Q4, they mentioned that there's less than a 6-month payback period on these MFC fulfillment centers. So if that's true, why not try to get as many out as possible, as long as it's sustainable with your cash pile, and do some marketing to let the customer know that it's something that they have, because a lot of people still think of them as a meal kit, especially in Canada. And I think if you look at the demand for like some of the incumbents right now, people are waiting multiple days to get groceries delivered, and they're paying much higher fees. So I think that if the customer in Canada knew about Goodfood and its on-demand delivery and the assortment, it's definitely something that customers want. And they just need to make it available for as many customers as they can.
Good point, and I fully agree with you on that. And that is so if you really want to find a company out there that is trying to solve the needs within the food space, and do it in a you could say in a future oriented way that is really customer centric, then definitely food is one of those to pay close attention to out there.
Yeah, totally agree. And I mean, that's kind of it for what I had to chat about the quarter. It's mostly just quick commerce on my end. Is there anything you want to add?
No, I would say we could definitely do a 2-hour special just talking about quick commerce and also doing the general P&L. But I think the presentation that's out there from management fills that role perfectly. And I think this was a great sum up. And like we said in the intro, it's really nice to have you back. I know you've been enjoying yourself in Thailand, but it's also really good to hear your voice again and have you come back to the markets now where we are trending also a little bit more upwards.
Yeah, it's kind of like the consolidation prize for like second last place now. All my companies are so beaten up, and then they have a couple of good days. Personally, as a pretty young guy, I'm happy for things to stay beaten down for as long as possible and have the chance to be able to add to things. But it definitely does feel It definitely does feel pretty bad coming back and just seeing how much of a haircut my portfolio took.
But but Adam, just to address also a thing, because we both of us are really about openness. So just to clarify for everybody, have you since you've entered food and had that as a position, have you ever sold any food, or have you maintained your position or increased it during time, or what have you done?
I have not, and I'd get more bullish, during certain quarters. So I'm still holding all my shares. However, currently, this quarter only had 5 weeks of quick commerce numbers. And because that seems to be the focus, I really want to wait a couple of quarters personally as an investor and really see where this story is going to go. And what about yourself?
Yes, so myself is a very similar status. So my current holding is the same holding I've had, which is like an all-time high holding in terms of amount of shares, but obviously not in terms of what the worth of those shares are. But yeah, personally, just a side note is I had a really bad feeling coming into Q4 because I think we had some metrics where it seemed that food was losing a little bit traction on in terms of top line, and then obviously the whole perfect storm came in with the Q4, which would tumble down the stock price since then. But with this, but I'm telling myself something similar to what you're doing, is that I have no interest at all in buying in and out of the company. So I've already taken the decision that this is something that I want to have in my portfolio, and I'm there for the long run. And also therefore not try to at all touch any buy or sell button around food. And yeah, one could, if the overall market is attractive, then one can only be a little bit bullish maybe on when looking at the current market cap and the potential it has. But obviously that's for everybody for themselves to take a view on. That's the big disclaimer. Nobody knows where this is going, and neither do the two of us, obviously.
Yeah, I agree. I mean, the story is very early. I assume if you bought in, you were buying in for what this company is going to be one day, not exactly what it is today. And yeah, look forward to following the story. I don't think that we're going to, stop following it. It's still exciting. And I don't think I'm going anywhere. I'm same as you. I'm in it for the long run. Hopefully, assuming that nothing disastrous happens. And with that, yeah, thanks for welcoming me back. I really hope that you get to go on your vacation. I won't ruin it. Talk about what it is in case something bad happens, but. Yeah, really, really nice to chat again, and yeah, it was an interesting quarter, definitely, and thanks for chatting.
Likewise, Adam. Take care.
Take care.